Hello and welcome to Pro Trader Strategies Market Commentary for Friday, May the 8th. It is an unenjoyment Friday, and you may recognize me as the Wolfman from mainstream media, where I've talked about this economic data and how it impacts the overall markets. Well, on the floor we called it Unenjoyment Friday because it was the big number of the month. Well, and it is kind of hindsight a little bit, but not the most important one. I mean, it is one of the most important ones, don't get me wrong, but it's not forward-looking, and I like to look at the forward-looking data. This is something that we kind of knew was coming down the pike, and we've got non-farm payroll numbers. Non-farm unemployment change was expected to be negative 22 million. Yes, 22 million. It came in at 20.5 million. So better than expected, but still we're talking Great Depression type of numbers here, which is astronomical. We've got the VIX coming off by 2 points and into the 20 handle, something we haven't seen in quite some time. It feels like a year or so, but VIX coming off, volatility coming out of that market. Well, usually when we see volatility coming out, it means the equities are moving higher, and that's exactly what we're seeing, despite the fact that we have 20 million people unemployed in 1 month. That was just last month in April. So just massive layoffs, and unemployment rate better than expected. It's only 14.7%. Well, it was expected to be 16%, so that's better than expected. But remember, last month's number, which was a reading for for March, was only 4.4%. And remember, if we go back even to like January, we're talking 3.5%. So just in a couple of months, a massive round of layoffs going through. We also got wholesale inventories coming in at a negative 0.8%, expected to be a negative 1%. So they're not moving as much inventories as we were expecting. I've been talking about, well, I think people are at home spending a lot of money online and going out and kind of moving those inventories and going through Amazon. But we saw with Amazon's earnings that they aren't really doing as well as everybody kind of was expecting. So I guess people are doing other things. Maybe they're doing home improvement and stuff like that. I don't know. It seems like if you look on social media, people that have been quarantined have been doing a lot of drinking, to be quite honest. So maybe it's going to go into the alcohol businesses like Budweiser and things like that. Maybe that's where we're going to see the good economic data. If you can find it there. Looking for a silver lining somewhere, I guess. Anyway, like I said, VIX out off the highs back into the 20s, and that's because we're seeing a move higher in equities, percentage point or better across the board here. We've got the Dow Jones Industrial Average up over 300 points, starting to creep back into the value area. That is something I've been talking about, moving back towards those point of controls in these different markets. We've already seen that get blown by with the NASDAQ and it being higher on the year. Well, we've got the E-mini S&Ps, the NASDAQ. Well, let's talk about the NASDAQ. It's making moves higher. Yesterday we talked about it. It did move back into positive territory for the year, finishing near the highs of the day. Well, we're up another point today, up 100 points right now, and the markets are blasting off. Even some of like the stocks that I wouldn't expect to be doing very well, like Penn, Las Vegas Sands, those guys are doing very well despite getting beat up on their earnings, and they're starting to move higher. Remember, I have Penn in my IRA. Now, they missed on earnings, but they are starting to move higher, and it's on the expectations that they are going to open up a lot of these casinos, how they're going to work on the social distancing, and if that is going to really start allowing coronavirus to spread is going to be something we've got to keep an eye on. But one thing everybody's talking about is this battle between Tom Brady, Tiger Woods, Phil Mickelson, and Peyton Manning. So Peyton Manning and Tiger are together. Brady and Woods are, Peyton and Woods are together. Brady and Mickelson are together. And it is expected to be one of the biggest bet on golf games ever. So I think that's giving a little bit of lift to some of these guys as well. They're expecting to be able to turn that spigot back on and have a lot of people come flying into the casinos to bet on some of these different aspects. All right, so E-mini S&P is up 35 points, also up over 1% on the day. If we do the breakdown, you can see, we did get that economic data point on the non-farm payrolls. Got a bit of a sell-off, but then snapped right back as people kind of were like, hey, it is terrible, but it's better than expected. So that's something we're seeing here with this market moving higher. To me, it's a bit of a conundrum, you guys. We are talking Great Depression numbers, and the equities are unchanged on some of these equities for the year. Now, NASDAQ, like I've mentioned, I kind of get the NASDAQ being higher on the year because it has a lot of these tech stocks that are expected to do well in this type of environment. But, with the rest of them, it could be something a little bit more of a overdone by the algos, if you will. All right, bonds are coming off today by about 1.5 points, still holding on to that 80 handle just by the skin of our teeth. Something to note, though, we saw the short end of the curve, which means the shorter duration, Fed fund futures, 2-year notes, 10-year notes, all really sliding drastically. 2-year notes were about 0.11, which is, out of the teens on the, inside of the decimal point, which means Fed fund futures are even lower than that. That 5-year was trading around, what was the 5-year? It was at 0.28, and then the 10-year was at 0.65. So all of those below 1%. That's 10 years out, all right? So that's just something we really haven't seen ever, really, for those rates to be like that low. It is, and a big move lower today in the 2-year notes to that 0.11, which was a pretty big deal on the news side. But bonds are coming off of their highs, which means those interest rates in the bonds are actually creeping up a little bit. So as the short end of the curve drastically dives, we're getting a little bit of a lift in the long end of the curve there. All right, we've got gold futures coming off, still holding on to 1,700. I think we're going to see that. As a matter of fact, I was going to throw on a trade on an iron condor in there, and I forgot to do that. That was something that I did on the webinar yesterday, looking at an iron condor around GLD. So I'm going to be probably putting that on after this, and maybe talk about that tomorrow. That was something I wanted to get done this morning and kind of forgot about it. Things got a little crazy. I had the hot water heater guy finishing up, and my pool motor went out. We've got all kinds of problems over here during quarantine. All right, so I was scrambling this morning. And all right, we've got crude oil moving a little bit higher right now by about 50 cents, still holding on to those 20s. To me, it looks almost like we're getting a little bit of a toppy move here. It couldn't get above that 26 and stay above 26. That's going to be the area of resistance. So I don't know if we're going to get up and above that. Definitely not likely today as we head into the weekend. Maybe next week we can get up above that. I would like to see that just for some of the jobs. This is one of the areas of the economy needs to be able to hold on to some of these jobs. They haven't really done a whole lot of laying off, but if we continue to see these price per barrel this low, we're going to start seeing some layoffs in that sector as well. All right, let's talk about some of the trades that I've done. Now, I'm trying to stay mechanical with some of this stuff. I like Microsoft because we talked about it being one of those things where it is a staple if you're going to be having a home office, right? They're going to be doing all kinds of stuff with, you know, we've seen the problems with Zoom meetings and people getting hacked in. A lot of people are switching back over to Teams, especially corporations, because they have a website. They can use this Office 360, which has Teams, and you can do those video conferencing through that. Well, I am long Microsoft in my trading account because it got put to me. If you guys remember, I was selling puts in this, so I'm long at 160. I covered some of them, and then I was doing short calls on the remaining half of what I've done. So half of my original position. So I've been selling some calls against that, and I had sold the May 195 calls in there. Well, I rolled those out to the June 200 calls. So I rolled them out in time and a little bit higher, increasing that distance. Again, 195 was a 52-week high, which, you know, we've been talking about that being a little bit crazy. But if I'm able to capture this rally, get that roll out in time and collect some more credit in there. Originally, I sold those 195 calls in there for about $1.26, I believe it was. I was able to buy those back for 20 cents and then roll those out in time for the June and collect a total of 121. So that's with the buying the credit, buying back the 195s for about 20 cents and then selling those 200 calls for about $1.41 if we throw it out like that. So been consistently rolling those calls out in time and up and away. So that works out quite nicely if I'm looking at that right. Oh, so those 195 calls I originally sold for 124. Bought them back for 20 and then basically sold these calls in here for the 200 calls for $1.44. And all in all, that's 121. So I'm lowering my overall cost basis on these. Like I said, it was only covering half of my long position is what I'm looking to do in there. So, you know, in a sense, those that I'm long, I lowered the balance or my cost basis by 50 cents each, all right, by continuing to sell these calls out in time. So that's what we're doing with Microsoft. I'm going to kind of hold on to this as long as we can. All right, now Thor Industries. I didn't do any options around Thor because there aren't very good markets around Thor. Something I did see that was interesting today is Thor has more volume than Aon in trading of that stock. They were close to 1 million, whereas Aon was closer to maybe 500,000 on the volume side. But big pop here in Thor Industry. And if you guys remember, I cherry picked this one quite low. As a matter of fact, I bought these on the April, was it April? Yeah, April 2nd. So April 2nd was right there. So you can see nice low area. One of the few times you can get very close to that bottom, and that's what I did here. You know, my thesis was I think that people are going to get away from like Airbnbs and hotels and flying on airplanes, and they're going to kind of get back to hitting the road, and especially some of the older generation will go out and start buying travel trailers, motorhomes, things of that nature. Now, if you've seen the JCO, like the Montana and stuff like that, you know, they are the pull behinds or the big travel trailer. That's Thor Industries. They own JCO and a couple of other ones. So they are the motorhome industry. And we've gotten a nice rally out of this. Like I said, I bought these at 38.10, so I didn't buy the low, but it was pretty darn close to it. And I got out of those today at 77 and 13 cents. All right, 77.12. Sorry. I ended up trying to start out a little bit higher and was chasing that this morning. But I got that big gap pop right there, and you know, I was kind of looking for this to go to the highs there, but I don't need to squeeze every penny out of it. I'm gonna cover that because if we get a bit of a pullback, then I'm gonna be looking at going back at that again. So that's all I've done so far today, but I am going to be looking at that GLD, selling a iron condor. Sorry, I don't want to really do anything that's not defined risk, but in that I'm going to be looking at selling like something along the lines of, we could probably just look at this right now. Looking at GLD, I'm going to go in and follow those rules that we talked about on Friday. And I'm going to be looking at starting at around the 21 strike. So basically, I'm going to be, I think I had to go a little bit further in on this trade yesterday and go a little bit tighter than what we're looking at. Anyway, so 173, so go $5 higher, looking at the 178s here. And so selling the 20-ish delta, which is what I talked about, buying $5 higher there, going to go down here to around the 20-ish delta. So selling the 151s and then buying a little bit lower, $5 going to the 146. That's kind of fitting my rule there. And then we check to see if it is going to fit the width of the spreads for the 130, 33% at least, 25 to 33%, $5 wide, 27.5. So that's what I'm going to be looking to do here. I'm going to change the quantities and play around with that one and send that off into the markets. All right, so change my price a little bit. I want to get a little bit more credit than what I'm shooting for there. So we'll talk about where I get filled on that in probably tomorrow's daily market commentary. All right, that's all I got for you guys. Hope everybody has a great weekend, and if you can't take that, take it easy.